Hey guys, Omar here, broker and CEO of Alden Mortgage and Omay Realty. Are we recording? Yeah. Just had to double check. Always important. YouTubers. So YouTubers, you guys, you got a little bit of a following. I'm hoping to get there one day, something, maybe, whatever. But YouTubers, okay, so you guys are going to be filing what's called a 1099. Now, 1099, this is mortgages for YouTubers. How are you going to go ahead and make, how do we schedule and what do you need to look out for? So if you are a YouTuber and you are trying to apply for a mortgage and you're trying to get pre-approved and you're trying to go ahead and, get that house up, whatever, let's hope that you're not one of those that get foreclosed on. You know who you are. But I actually read there's this YouTuber guy that, he bought this LA mansion not too far away from my house actually. And he kind of went into kind of like in a bad situation. My heart goes out to that guy, every time you go to a foreclosure or anytime that you have to leave the house that you're trying to do. Apparently he had like some deal with some contractors, and which I understand, it happens all the time. It happens like to the best of us, right? It is whatever. But let's get into the mortgaging. Now since you are a self-employed person, what you need to do is first we need to know how much income you make, and then when you see your 1099 and you're finally filing your taxes and you're doing all of that, what you need to do is you need to go and look at your Schedule C. Your Schedule C, line 31, which will go ahead and give you your net profits. Now your net profit is going to be what we're going to go ahead and calculate as far as your total mortgage, your total income goes for your house. Now there are other ways around it. I will make another video on taxes and how you go ahead and structure it. Now mind you, I am not a CPA. I look at taxes all the time. I'm pretty well versed when it comes to taxes, but of course I am not certified, so I highly suggest you go and find yourself a CPA. If you don't have one, I'm not gonna refer anybody because I always hate be like, oh, Omar referred this guy to me and now my taxes are complete shit. I have no affiliation with any CPAs. We don't get money off of any of them. We don't go back and forth with any of them. So as far as this video is concerned, this is just going to give you the brief rundown of exactly what it is YouTubers, especially self-employed, because you are self-employed, what you have to look for. Now there is a couple of programs out there which we'll go ahead and mention towards, as we go along. There are two programs that you are able to go ahead and qualify for. Now within these two programs, now just understand that they're higher risk loans, okay? Because you as a YouTuber, right, we are based off of what you have done for the past 2 years. So number one is you do need 2 years worth of income to go ahead and qualify. Now, you're going to be writing off a bunch of stuff, right? You're going to have to. You're going to go nuts, and you got to, you have expenses, and especially like I heard there's this one guy, Mr. Beast, right? Mr. Beast, this guy, he just blows everything. So his P&L probably looks terrible. It's probably just horrible. There are other ways around it. We can't get letters from CPAs to kind of justify exactly what we're asking for. You could use your house as an expense if you are using it solely for the purpose of, whatever business that you are in. But as far as this video is concerned, let's just go on with the whole YouTuber thing. Now, when it comes to YouTube, you have your AdSense, right? Your AdSense is going to be one part of your revenue stream that you're going to be coming through. The second part is going to be, of course, any affiliate merchandise that you're going to be selling. Now you have your clothes, if you do clothes, or camera gear, or whatever it is that you are affiliate selling, which this is the point of this whole YouTube channel, is I'm doing my own affiliate selling. If you want an up to 50% commission rebate on your next real estate purchase, and for 0% commission listing, and for any mortgaging needs, link in the description below. We'll be more than happy to help anybody out, but whatever. So the two that we have your standard. These are not really difficult loans. We could go conforming when you get into the high price range. Like let's say if you're a very successful one, like the Logan Pauls, and by all means, if you those Paul brothers, man, if you are actually like one of those guys are actually really, really impressive. Exactly what they did. Whatever you feel about them, that guy went arguably. he went the distance with arguably one of the best boxers of our generation, with Floyd Mayweather. That guy is amazing. You might not like him, you might not like what he did, you might say that he boxes like shit, but you know what? I didn't see you in that ring boxing Floyd Mayweather. You know what I did? I saw that guy, and he went the distance. You lost, but so what? You lost against one of the greats of all time. And the other kid, he murked Tyron Woodley, completely murked him. He went down, face plant, and he just... Good for you guys, man. You guys are doing it. You guys, that's pretty impressive stuff. But whatever. Now, those type of guys, they have multiple sources of income, right? They have their, well, especially like, let's say, for instance, they're on the fighting spree. Now, I don't know exactly how they structured it. We will make another video about exactly the right way to structure whatever business that you're into, because you never want to have anything directly associated with your name. You always want to build a business, and then that business, you're going to go ahead, and the best way to do things is to pay yourself through the business. But for the sake of argument, we're going to go ahead and do this, which is going to be what's called a 1099 miscellaneous. Now, that's what you're filing, that's what you're going to be doing, that's just where you're at. Now, that 1099 miscellaneous, and then when you finally go, what we look at is we're going to go ahead and look at what your profit is. Now, you're going to have your expenses. Like I said, you're going to go into your P&L, which is your Schedule C. Now, you'll see it on the top of the paper, okay? Whenever you're filing your taxes, you'll see on the top, it'll say profit and loss. On the profit and loss, you're going to go ahead and scroll down. Now, it's going to go ahead and give you your income. Then it's going to give you whatever you're writing off, your losses. And then you scroll down, you're going to go to line 31. Line 31 is going to give you your total net proceeds. That's how much you made after you endured all of your losses. Now, as far as the two loan products that there is, now you have your everyday cookie cutter, dry, conventional loans. Now, these are your conforming. Now, what does conforming mean? Now, conforming just means that it conforms to the Fannie Mae or Freddie Mac products. So these are the two main insuring bodies that go ahead and insure these mortgage-backed securities. So you could just go with those. It's not a big deal. So whenever you're YouTuber, now this falls into like any type of job out there that requires a 1099. Now this could be a plumber, it could be if you are independent, right? If you are just working for yourself and you are just self-employed, right? So if you're a self-employed person and you're just going about this, then you could go ahead and do those conforming guidelines. Now, conforming guidelines are very, very simple. They do have limits to them. Now, we do have your regular. You can do FHA. You could do your run-of-the-mill 20% down if you want, which would be on your conventional side. You could do 3% down. You could do 5%, 10%. It depends. But like I said, you need 2 years worth of income that's coming in. Now, we only consider the whole taxable income. So remember, when we're looking at that line 31, that is going to be your taxable income on your Schedule C. Then what we have on the other side is going to be your non-QM products, which is called a non-qualified mortgage product. Now, the non-qualified mortgage product, we don't really need to see much of anything, okay? We have bank statement loans, portfolio loans, we have just gig qualifier loans. We have a bunch of different avenues to go. Now, these are going to be higher cost loans, okay, because they don't fall under the conventional side. So it's not like this big corporation like, we have Freddie Mac and Fannie Mae. We don't have these two major corporations that are insuring these, and it's not suited to their guidelines. Now, we have to go outside of those guidelines. Remember, we have to go and try to find somebody else. So what they do is we have these independent investors that they deal with non-qualified mortgages. It's like the Fannie Mae and Freddie Mac, but in their own little world. And they go ahead and package all of these up, and they go ahead and buy, sell. Now, mind you, if you do have to go into this realm of mortgages, this is not something that we want to stay in for too long of a time, okay? We want to stay in it for a very, very little bit, because it gets very, very expensive, and you being a very successful YouTuber and you're just bringing in that buku bucks and you're just killing it, millions and millions of views days in and days out, you still don't want to waste your money. You don't want to throw it away. You don't want to get into a really bad financial situation. Because who knows, you could fall off on YouTube. This is just a platform that you're trying to gain your popularity and you're trying to go ahead and just keep growing and growing. But if you are a successful YouTuber and you are just, doing what it is that you're doing, just remember, we could only calculate what your net total income is going to be. Again, for the millionth time, that is line 31. Don't go right off happy where you're just like, you made like, I don't know, $1 million, but you wrote off $970,000. How are we gonna go ahead and qualify you with that? We can though, we can. Now that is gonna be on those other loan models, but I want you, I always prefer to go ahead and make sure that you save as much as you possibly can. And the way that you could save as much as you possibly can is to go ahead and make sure that we do it on the conforming and non-conforming side. Now, non-conforming side, we could also insure it through those two products, through those two insurance agencies. Now that is going to be, your jumbo loans on the high balance. Like let's say you want to go buy a Hidden Hills mansion. I'm sorry, I apologize. That's going to be on the non-qualified mortgage. Those are expensive. Those are very, very, very expensive. Now, mind you, if you are trying to buy one of those and you're trying to do all of that, you're probably, in the cash product era, which has no interest rate. Now, when you are going with the cash, majority of people will go ahead to make their offer seem very, very appealing. They'll just buy it in cash and then they'll just pull out cash out refinance afterwards. Very, very common. Tons and tons of people do it, especially because they're in the 2021 and 2020, everybody and their mother. I mean, we did have that available where you could, we had programs to where we will put the cash up for you. And of course, we pre-approve you beforehand. And as soon as you do, then we go ahead and put you into a mortgage product. Now, this is because most people want to go ahead and waive contingencies and appraisals. They want to waive a bunch of stuff. And as long as we do our due diligence and we go ahead and make sure that, this house is worth what we think that it is. And if you've been noticing, house prices have just went crazy. Like it just blew up. Now the second part that you're going to have to go ahead and take a look at is just make sure when you have those affiliate selling that you're not writing off a lot of that stuff too, okay? And this is just for the sake of getting yourself into a mortgage product. That's all this is. Once you get into your mortgage product, I could care less what you do, how you do it, whatever it is, but once you get into that house and you get qualified, because we're going to need 2 years. 2 years on the conforming side when it comes to the Fannie Mae and Freddie Mac products. We don't need that if we're going on the bank statement, get qualifier loans, or any of these other loans that we have where it doesn't require the income base. Now, mind you, there's asset loans that we could go ahead and do, but if you have really, really great assets, like I see a lot of you crypto guys are just, doing what it is that you're doing. I'll make another video on crypto ones. But these are things that you're going to go ahead and mind you, you're going to have to keep really, really, really a close eye on. This is just temporary. You can do whatever you want afterwards. I don't care. But let's go ahead and get into exactly what the requirements are for the conforming side, give you a little breakdown of it. I will go ahead and keep posting different loan products that we have available that kind of tie into this one. And now I'm just realizing I talk a lot with my hands. I don't know why I talk a lot with my hands. I don't know. It is what it is. But conforming, let's get into depth with that a little bit so you can kind of see exactly where you stand on the conforming side. Now on the conforming side, okay, so we're going to go ahead and we're going to spark note this. We're going to make this very, very simple. Now what you're going to need is you're going to need 2 years worth of your personal or your business statements, right? Your tax returns. We're going to go ahead and something that will be able to be tracked when we go ahead and order your transcripts to the IRS. Number 2, you're going to have a debt to income. Your debt to income, we're going to have what's called the front end, which is just going to be what your mortgage is, right? So let's say, for instance, hypothetically, it's a $5,000 mortgage. That's what your front end mortgage is going to be. And that has to fall into, back to going to your Schedule C, line 31, it's going to be at 37%. Now they do go up, they do go down, and different products. Now I'm just going to go by what is conforming currently. We can go up to 39%, but you don't want to go that big. I mean, I guess if you want to, you're world scroller just trying to get a nut. Number two is going to be what's going to be your back-end ratio. Now your back-end ratio is roughly about 47 to 48%. Now this includes all of your total rotating expenses, whether you have lease payments or you finance a car, your credit cards, whatever other expense that you have that is recurring that you have a balance on, this is going to be what's your back-end ratio. Now, that is going to include the total mortgage payment plus whatever other expenses you have. So we're at like 48%, somewhere around there. We can go a little bit higher depending on different loan products, and sometimes they change these guidelines so much. They change them all the time. So just know that that's where we're going to kind of be at. Then of course, then we're going to need, your bank statements. We're going to need to see your, which will be the last 2 months. It's not that big of a deal. When you're on the conventional side, honestly, the only thing that makes it really, really difficult is when you're starting to go credit card happy, and you accumulate all of this debt, and then we have to justify a lot of it, or you have inaccuracies in your credit report, or things like that, which then what we do is we have to go ahead and explain that, which we go ahead and write what's called an LOX, which is a letter of explanation. Letter of explanation, this person did this, he did this happened here. Well, whatever it happens, there's always ways around it. Now, that's why I give you these rough guidelines, is because every single person is different. Everybody's situation is different. So we could kind of like, play it by ear by how every single person goes. Then after that, we're good to go. So we have your taxes, we have your income, we have all that other stuff, and then we have your down payment, whatever it is. Now, when it comes to that, you have your conforming, non-conforming, FHA, USDA, and then you have your VA. VA, of course, if you're a veteran, thank you for your service, me as well. And you're a YouTuber, you could go down that route. Those are 0%, like you don't have to put any money down, nothing at all. There's actually other programs out there that will go ahead and help you pay for the closing costs. Or you could take a little bit of a higher interest rate and then run that into your closing costs. And these, of course, depend on if you're going to impound. Now, again, impounding your account just means that you're taking your taxes and your insurance and you're just rolling it into your monthly mortgage payment. That's all it means. Impounding, taking your principal and interest, taxes and insurance. Well, we just call it pity. I know it's not clever. It's just whatever. And then we go from there. And then we have the other side of it, which we have your non-qualified mortgage products. Now, your non-qualified mortgage products are just going to be exactly that. They're non-qualified, so we could do something that's called a bank statement loan. Your bank statement loan is just going to be, hey, let's look at your bank statement. Let's see how much money you have. Sometimes it requires 24 months. Sometimes it requires 36 months. It all depends on how much money you have stacked up, how much of that feria that you're just locking in, and then we could go ahead and calculate it from there. And then we do your debt to income. We see how much expenses you have, how much you are actually bringing in, and then we run it that way. This way we don't have to do tax transcripts. We don't have to do any of that other funky stuff. We just go straight purely off of your bank's transcripts. Now, on the other end of it, there are some other things that we tend to look at. We do look at, your citizenship, whether you're naturalized, which you think. Now, a lot of the things, like whether you're naturalized or you're legal, like you're born here, they don't really matter. What gets a little funky is when you, like, let's say you're in process of getting citizenship, but you got a social issue. I don't know if that's actually a possibility. I'm actually guessing on that one. Should have probably thought about that a little bit more before I spoke, but whatever. And then your non-citizens, those become a little bit different. Of course, we have different products for that. There are products called DACA programs. I'll make another video on that. But this lets you know, the reason why I say a lot of these other loan products is because this gives you an idea how many loan products that we actually have available and how we could get you approved. Now, these are all going to range between no money down to between 20 and 25% down. So it's all going to be dependent on exactly what we could get you approved for. The non-qualified mortgages, of course, those are going to require a little bit more of a down payment. They're going to be a little bit more expensive, and that's only because these are super risky and the lenders want to go ahead and it's called risk mitigation. They just want to mitigate their risk. Mitigate just means like, they want to make sure that they have all their ducks in a line and not throw it away. But yeah, as far as loan products, those are your key winners. Those are, that's where we're at. Hopefully this content helped you out a little bit. If you are a YouTuber, please, if you're in California, Hook a brother up with a like, subscribe, comment. If you do need a mortgage broker in your back pocket and you need some assistance, please let me know. I'll be more than happy to help you. This is not a promise to lend. This is an equal housing opportunity lender, and NMLS ID in the description below, blah, 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 blah. That's exactly, whenever you hear those disclaimers, I swear to God, that's what I hear. That's what whenever they're like, NMLS ID number, but yeah, our NMLS ID number, 1486181, that's my personal one, or business one. All that stuff is in the link description below. This is for informational purposes only. And for up to 50% commission rebate, even if you are your Mr. Beast and your Logan Pauls and all these other kids, and that crazy little kid that my kids watch all the time that does those toy things. What is that kid's name? I don't know, the Ryan kid. All of you, if you need assistance and you're in California, let me know. I'll be more than happy to help with any mortgaging needs that you need. Until next video, guys, I really appreciate you watching. Hopefully you enjoyed it a little bit. And until next video, guys, thank you.